please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Now, a lot of earnings expected. We'll go straight to Nigel for ACC. Nigel, volume growth on the back of new capacities?
Absolutely, Mangalam. Firstly, I'm hoping that the numbers come pre-market hours because, don't want them to keep me too late. But what I understand is that the meeting starts in the first half. So maybe for lunch, we can have these numbers maybe around 2 p.m. is the sense that I'm getting. In terms of numbers, as you said, yes, on the top line, there'll be a growth of around 21%. ACC has pan-India presence and bulk of that top line growth will come in because of higher volumes. And the volume is expected to come in at roughly around 6.4, 6.5 million tons. That's the number we're working with. 18% growth. Jamul and Sindri, they have carried out expansions of them. And that's what will really bring about that growth. In addition to that, remember in the base quarter, there was a degrowth of around 9%. So put that all together, that's telling you that, in fact, the top line will jump up by around 21%. Realizations haven't been that great for a lot of cement companies. But remember, they have been pushing some of their premium products like ACC Suraksha. That's one of their products that they have. And that's what will help realizations a tad bit. In terms of operating profit, we're going to see a big jump. On a year-on-year basis, it'll look very good. It'll jump up by around 40%. Margins as well should expand by around 150 to around 200 basis points. What helps them? Operating leverage. They definitely are producing more, so operating leverage kicks in. The second factor that will hurt them a tad bit is that pet coke prices have jumped up. So, that's what will limit the margin expansion gains there. The profit number jumps up by a good 200%. Why is that? Better operating profit, point number one. Second point is that in the base year, there was an exceptional loss. So keep an eye out on these set of numbers. Second half of trade, valuation-wise, among all the big names, this enjoys the valuation comfort. But in terms of an EBITDA per ton, well, it's a tad bit low if you compare it with Ultratech Cement or with a Shree Cement or an Ambuja Cement.
Okay, Nigel, so that was about volumes for ACC that are expected to improve. But is it a similar story for SAIL as well? The steel volumes are expected to improve?
Absolutely. SAIL, it's been all over the place. I remember the stock at 50 rupees. Suddenly, it surprised everyone, went away to around 100 rupees. And, there's been very positive commentary that's coming in from the steel secretary and from the central government as well. Now, in terms of SAIL, what really drives them is that we're expecting a top-line growth of roughly around 15 to 16%. It could come in even higher than that. Why is that? Because of higher steel volumes. That's point number one. The second point is that we know realizations have been on a tear. So that's what helps them in terms of a top line. The sales volumes that we're working with is a growth of roughly around 16 to around 18%, should come in at around 3.8 million tons or thereabouts. The operating profit, this time around, we're working with the profit. Same quarter last year, there was an operating loss, so that should look quite good. And margins of around 8.8% is something that we're looking at. Why will there be an EBITDA growth? Why will there be a positive EBITDA number? Better steel prices, operating leverage, kicking in. And also, remember, at some point of time, SAIL used to sell semis. That's not the finished product. Now they're converting the semis into the finished product, and that will help realizations and help their profitability as well. But it has to deliver net loss this time around as well, is what the poll threw up. In fact, it's expected to throw up a number of around 50 crores. There's a wide difference. Edelweiss, for example, is expecting a profit of around 170 crores. On the flip side, you have Citi that is expecting a loss of around 230 crores. So for SAIL, really look at the operational number. That's going to be important. The stock has corrected, close to around 20% from the recent peak, 17 to 18% from around that 101 odd levels. Second half of trade, it's going to be a busy afternoon for me.
It's going to be a busy afternoon. Thankfully, it might not extend into the evening,
hopefully,
as you say.
Hopefully.
Not. We'll keep an eye out on that. But we can't do without our daily dose of medicines, can we? Glenmark Pharma and Cadila, on the back of their third quarter earnings, those stocks will be in focus. Ekta, what is the street expecting?
Well, I'm going to actually look out for both the numbers quite closely. For Glenmark, I just want to start by saying that it is going to be a quarter where there is going to be a high base on a year-on-year basis, because same time last year, they were benefiting from the cholesterol drug Zetia generic, which they had launched with exclusivity. So there is a high base impact which comes through. So I think the street will be looking out for a net adjusted US growth in terms of what they have recorded. Remember that multiple companies have spoken about how price erosion is possibly bottoming out, but at this point in time, it is probably a strategy which a lot of companies are adopting in order to consolidate the US business, remove what exactly is not working in the US business, and look at high margin products. So I'm going to wait by and see what exactly Glenmark is going to deliver when it comes to commentary as well, and when it comes to the debt figures. With regards to the India business, they have a very strong portfolio, especially for dermatology products. So I expect that to probably wade through the effects of GST and see some amount of an uptick. Now, with regards to Cadilla, I do expect it to be probably one of the peak quarters in terms of earnings for Cadilla, and that's simply because of the kind of earnings that we will see from Tamiflu generic. Remember that the US has seen a strong flu season, but most of the sales will probably accrue in Q4. But they also have the exclusivity of Lialda generic, which is going to boost the numbers for Cadilla. But what happens henceforth? There is also an inspection which is going on for their Moriah plant, which started on the 5th of Feb. So the commentary is going to play a really important part for Cadilla this quarter, and what the projection would be going into next year. A lot of moving parts with regards to this particular inspection as well, because a lot of approvals from the Moriah facility. This one is going to be keenly watched, according to me.
Well, specialty chemicals manufacturer Galaxy Surfactants will make its stock market debut today after concluding its IPO last week. Naveen is here with the details of the same. Naveen, good morning. Take it away.
So beginning with the issue size, remember Anisha, the issue price is around that 1,480 rupees, and at the issue price the market cap will be around this 5,200 crore mark. Also promoter holding will come down to 71% from 76% post the listing. Now in terms of the grey market premium, we are expecting a premium of around 5-6%. Talking about the company, as you clearly pointed out, specialty chemicals is what the basic manufacturing of the companies, but that is divided into two kind of segments. That is, one is performance segment, which comprises almost 65% of the overall revenues, while the other one is a specialty care products, majorly on the home care segment. That contributes around 30-35% of the overall revenues. Talking about the clients, a whole host of big names, the likes of Colgate, Palmolive, Kevin Care, L'Oreal, Procter & Gamble is what the company caters to. In terms of the exports, they exports to a host of African as well as Middle Eastern countries, and export comprises of almost 60-65% of the overall revenues for the company. Fundamentally, if you see, margins have been around the 12-13% mark. Meanwhile, the PAT has grown by close to 23-24%, but the top line growth, that has been a meager 8% in the last 3 to 4 years. So that will be a bit of a concern for the market watchers. In terms of the listing, if you see a listing around that 1,400 or 1,550 mark, the stock will be trading at around 31-32 times. Nevertheless cheap, but there is no direct peer for the company. The closest one is SH Kelkar, which is trading around the similar valuations of 35 times. So we expect the listing around that 5% or to 6% jump in terms of the premium. Back to you.
All right, 5-6%, no more is what the grey market is indicating. We'll keep an eye out on Galaxy Surfactants. Thanks a lot for that, Naveen.
Well, let's take a quick check of what's happening in the Asian markets. When we started the show, the Nikkei was up around 0.8%, but now it seems to be losing steam because now it is up about just 0.2%. Shanghai has opened in the red, but Hang Seng is actually doing well because that one has opened 0.8% higher. As far as SGX Nifty is concerned, now that one is also suggesting the positive start to be there, up around 50 points on the SGX Nifty as we speak, but Kospi as well now trading with around 0.2% gains. But in the world of commodities, actually crude has started on a bit of somber note. Remember, for this week itself, that commodity is down for around 4%. Manisha Gupta joins us now to tell us the reasons and more. Manisha, good morning.
Morning, and thank you for that. Well, yes, a couple of percentage points of decline is what we have seen in the New York session yesterday. And this is after the U.S. government shows that the stockpiles in U.S. have seen an increase of nearly 2 million barrels per day. If you look at the U.S. output itself, that has increased to a fresh record high of 10.25 million barrels. The drilling rig activity has been increasing, and there are estimates that the U.S. output will continue to increase not just in this year, but the next year as well, and that has pulled the prices down. And as you said, we are trading at a one-month lows. The U.S. crude prices are down 5.5% in this week, and the Brent is down 4.5% as well. But the decline doesn't stop at the energy space itself. The industrial metals also saw a very rough night. The U.S. dollar strength and also the fact that the China is not buying right now at these current levels has led to speculative longs unwinding. So we saw the copper prices fall by 3% last night, and copper is now down 6.5% in this year. Lead is down 4.5%. Zinc is slipped by 3%. So almost everything in metals has declined in the New York session yesterday, and Shanghai has opened on a weaker note yet again.
All right, Manisha, thanks a lot for that. We'll keep an eye out on the commodities arena, crude in specific. But let's get a handle on what took place from the F&O space. Now, the F&O cues, remember, you'll have to keep in mind the kind of reversal that we saw in yesterday's trading session. The Nifty down about 140 points, the Sensex down 600 points, the Nifty Bank itself down 400 points from the high point of yesterday's trading session. The intraday live indicator that we have is the Nifty Futures Premium. That turned into a discount, telling you that there was some selling pressure at the top, and that was a lot of long unwinding, and that's exactly what took place when the data came by in the evening as well. So that was what it was revealed. The FIIs, they sold about 1,000 crores in cash the second day, where they sold in excess of 1,000 crores. Index futures, they sold about 1,751 crores, though they bought some in stock futures again for the second day running. In index futures itself, unwinding of 15,000 long contracts, addition of close to 8,500 short contracts is what really stood out. With this, the FII long exposure now is just at 53%, which, remember, was 80% at the start of this series. The key thing to watch out for today will be the Nifty Bank weekly options expiry. So we have the 26,000 call, that's the 24,000 call, 26,000 call, and the 25,500 put. Both of them are most active, so watch out for those markers, broader markers, but keep an eye out on that. For Nifty itself, the put call ratio came off sharply. Remember, sometime last series it was as high as 1.8, 1.9, and now it's just about 1. That's telling you a lot of action is taking place out there. And freak trades, perhaps 11,100 call, 30 lakh shares added in open interest for 13 rupees. Maybe someone taking a punt out there or not too sure. 11,000 call too was in action, but the 10,700 call saw some writing, so that is something we'll keep an eye out on. Some bit of pressure at the high levels.
Okay, some bit of pressure at the higher levels is the word coming in from the F&O space. But with that, it is a wrap on Power Breakfast. From the team and myself, thank you so much for watching. We leave you with the picks of our bullseye contestants for the day 4 of the week.
My first call today is a buy call in MCX. It's stop loss below 701 for target of 768. My second call is a buy call in Navbharat Ventures. It's stop loss below 138 for target of 158. My third call is a sell call in MRPL. It's stop loss above 120 for target of 108. And my last call is a sell call in Max Financials. It's stop loss above 529 for target around 490.
My first stock call for the day will be a buy on SRF, which I'd buy with a stop loss at 1750 and a target of 1820. My second call will be a buy on Muthoot Finance, which can be bought at the current levels with a stop loss at 390 and a target of 415. My third pick will be a buy on MCX with a stop loss at 720 and a target of 760. And my final stock call for the day will be a buy on Jubilant Foodworks, which can be picked up at the current levels with a stop loss at 1950 and a target of 2080.
The first buy recommendation is on Kajaria Ceramics. One can buy Kajaria Ceramics for a target of 646 with a stop loss of 588. The second buy recommendation is on Arvind Limited. One can buy Arvind for a target of 404 with a stop loss of 377. The third buy recommendation is on Punj Lloyd. One can buy Punj Lloyd for a target of 22.90 with a stop loss of 20.25. And a final buy recommendation is on Reliance Industrial Infra. One can buy Reliance Industrial Infra for a target of 490 with a stop loss of 449.